Welcome back to the Deep Dive. Ready to dig into some serious investment wisdom?
Always.
Awesome. So today we're diving headfirst into some excerpts from the 6th edition, a pretty influential book on security analysis.
A classic.
Plus, we've got some juicy bits from the foreword and introduction to really get the context. Now, you might be thinking, 1934, isn't that a bit, well, ancient?
Yeah, I could see that.
But trust me, the stuff in here, it's like timeless gold. Seriously.
Yeah,
Never loses its shine.
that's what they say.
So, our mission, should we choose to accept it, is to unearth those golden nuggets and see how they can be applied today. You know, like in our modern world of investing.
Sounds like a plan.
Right. Okay, so here's the thing that really blew my mind. This book. Warren Buffett, yeah, the Warren Buffett still swears by it.
Really?
Yep. Considers it like his bedrock, the foundation of his whole investment strategy.
Well, that says something if the Oracle of Omaha is still learning from it.
Exactly. So what's the big secret? What's the core philosophy that even Warren Buffett finds so valuable?
It all boils down to, well, value investing. It's like being a detective, Searching for hidden gems, assets that are creating for way less than they're actually worth.
Like finding a dollar for 50 cents.
Exactly. That's the kind of edge value investors are always hunting for.
Okay, so it's all about finding those bargains. But how does this book actually help us do that?
It's not so much about a magic formula, more about a way of thinking. It gives you the tools to analyze investments, really critically, to cut through the hype and figure out what a company is actually worth, not just what the market says.
Like learning to read between the lines.
Exactly.
Okay, so how can we tell the difference between a company's perceived value and its actual value?
So the book uses this really cool analogy. It compares the market to a voting machine.
A voting machine.
Yeah, in the short term. Stock prices, they're driven by emotions, trends, whatever the crowd is feeling doesn't always reflect the true value.
Sounds familiar. Kind of like what we see with all the meme stock craziness and social media hype these days, right?
Yeah. Spot on. But here's the contrast. In the long run, the market acts more like a weighing machine. Over time, it sorts things out and weighs a company's true worth, looks at its assets, earnings, its potential.
So short term, all emotion, long term, back to logic. Kind of like the market has a split personality.
You could say that. And as investors, we get to choose. Do we get swept up in all that frenzy, or do we focus on the fundamentals? Let the weighing machine do its work. Which side are you on?
Tough choice. But I think I'm more of a weighing machine kind of investor. Steady and slow,
Okay, but here's the thing that's been bugging me. This book was written in 1934.
Right.
How can it possibly still be relevant in today's world? I mean, everything's changed. The financial landscape is completely different.
True, the world's transformed a lot since then. But the thing is, the core principles of good investment analysis, they don't change. You still need to understand a company's business, its management, its financials, what's it going to do in the future. Those basics, they're still the same, even if the companies and tech have changed. I see your point.
Yeah.
Let's be real. The authors couldn't have predicted things like the internet, smartphones, all that.
True.
So how can their framework possibly apply to these completely new industries?
You're right. They couldn't have predicted those specific things. But what they did give us was a mental model, a way of thinking about investments that can be applied to any industry. It equips you to adapt, apply those principles to any economy, any company, anytime.
So it's like they taught us how to fish, not just gave us a fish.
Exactly. It's about developing the skills to evaluate any opportunity that comes your way. And that's super valuable in a world where things are changing so fast.
Okay, I'm starting to get it.
Right.
But let's face it, these days we're drowning in information. Every minute, it's news, data, opinions, everything.
Tell me about it.
So how can we possibly sift through it all and actually make smart investment decisions?
That's a huge challenge for sure. And you know what? It's something this book addressed way back then. They knew that separating the signal from the noise was key. So it encourages you to really focus on what's relevant, find the reliable sources, and tune out all that hype. What actually matters to you when you're evaluating a company?
That's a good point. It's easy to get lost in the noise. What other nuggets of wisdom really stand out to you?
One thing that's really hammered home is the importance of understanding a company's real earnings. Not just the numbers they report, but what's actually going on.
Oh, you mean like companies trying to cook the books?
Yeah.
Make themselves look better than they are?
Exactly. The book shows you how to spot those common accounting tricks, the ones companies use to kind of inflate or hide their true earnings.
So it's like learning to spot a counterfeit bill. You need to know what to look for.
Exactly.
It's amazing to me that a book written almost a century ago can still be so relevant today. It really shows that true wisdom, it endures.
It does.
And you know what else is interesting? The book talks about how back in the 1930s, when it was published, there were a ton of companies trading for less than their liquidation value.
Wow. So their parts were worth more than the whole.
Yep. It seems illogical, but it shows that the market doesn't always get things right. And it makes you wonder, about market efficiency and what management is actually doing. It's a good reminder that opportunities can pop up even in markets that seem completely irrational.
That's a good point.
So there were opportunities even back then to basically buy companies for pennies on the dollar. That's wild. But what about today? Do those kinds of opportunities still exist?
They do. They're out there, though they might be a bit harder to find.
Yeah, Fed.
It takes some serious digging, a sharp eye, and a lot of patience to wait for those moments when the market gives you a chance.
I bet. Okay, that brings it to another topic that's always fascinated me. High-yield bonds. I know they can be risky, but those potential returns.
Yeah, the allure is definitely there.
So what's the book's take on these? These potentially lucrative, but also potentially dangerous investments.
It goes deep into the complexities of high-yield bonds, acknowledges the potential rewards, but doesn't shy away from the risks. It's all about understanding how they've evolved and how our idea of risk has changed since the 1930s.
Oh, interesting. Can you give me an example? Like, how has the landscape shifted?
Well, take the Texaco bankruptcy back in the 80s. That was a major wake-up call, showed how companies could use bankruptcy to, well, escape liabilities. It really highlights the complexities and the potential pitfalls you got to watch out for.
So it's not just about chasing those high returns. We need to really understand the risks involved.
Exactly. The book stresses the importance of caution and analysis. There's no such thing as a free lunch in the market, right? High returns usually come with high risks.
True that. So we've talked about value investing, the market's two sides, the information overload, real earnings, and even those undervalued gems. But what about going global? Did the book talk about investing outside your own country?
Well, you got to remember, back in '34, global investing was still a pretty new idea.
Oh, right.
But they did touch on it, and their advice: look for simple businesses with strong franchises, even in those foreign markets. They recognize that sound business principles, they're universal.
Good advice no matter where you're investing.
Absolutely. Understanding the fundamentals, that's key. Though, to be fair, the book doesn't go super deep into the specifics of international investing. Makes sense, considering how much smaller the global markets were back then.
So it's more of a starting point. We need to build on that knowledge as we explore those global opportunities.
Exactly. The investment world is way more interconnected now.
Definitely.
And going beyond your own borders, well, it's got its own set of challenges and rewards.
I can imagine. It's a whole new world out there.
So, building on that idea of global markets and investing, one thing that's always top of mind for me, and I bet for a lot of listeners, is diversification.
Oh, diversification. That's a big one.
Right.
Yeah, because it seems simple on the surface.
It does.
Spread your money around. Don't put all your eggs in one basket.
Right, exactly.
But in practice, it can get pretty tricky.
It can. It really can. And, a lot of people misunderstand it. Just spreading your money across a bunch of random things, that's not diversification. That's just, hoping for the best.
Right. So it's not just about having a lot of different investments.
No, it's not about quantity.
What makes it really effective?
It's about understanding the relationships between those assets, how they react to different events.
Oh, okay.
You want a portfolio where if one thing takes a hit, another one might hold steady or even go up.
Right. So it kind of balances out.
Exactly. It smooths out those bumps in the road, reduces volatility.
Like having shock absorbers for your portfolio.
Exactly. And that's where the principles from this book come in. Analyzing those investments, figuring out their intrinsic worth.
Yeah.
Thinking about how they all fit together.
So it's strategic.
It is. It's not just random.
Not just throwing darts at a board.
No, not at all. It's about making informed choices. That way, you build a portfolio that can handle the ups and downs.
That makes a lot of sense. Okay, I'm really starting to see the value here, how this book can be applied today.
Good, good.
But, got to be honest, one area I always struggle with is analyzing financial statements.
Oh, yeah, those can be intimidating.
They are. They're so dense and there's so much jargon. It's like reading a foreign language sometimes.
I know, right? And that's another place where this book really shines. It gives you a framework, cuts through the jargon. It
Okay.
helps you focus on what's important.
Like a translator.
Exactly. So let's talk about earnings, for example. We touched on this before, but it's so important.
Yeah, real earnings versus reported earnings.
Right. Because companies can, let's say, get creative with their accounting.
Right, make themselves look better than they actually are.
It's like putting makeup on, hiding those blemishes.
Exactly.
So the book, it shows you how to spot those tricks.
Okay, so what are some of the red flags?
Well, one thing to watch out for is depreciation. How are they handling that?
Depreciation. Refresh my memory on that one.
It's how an asset loses value over time.
Right, right.
And it's a legitimate expense, but some companies might try to, downplay it.
To make their earnings look better.
Exactly. It's like pretending your old car is still worth what you paid for it.
When it's clearly not.
Exactly.
So they're basically inflating the value of their assets.
They are, and that can distort the whole picture.
Yeah, that's sneaky.
It is. Another thing to look at is how they handle extraordinary items.
Extraordinary items. What are those?
Things that pop up, outside of normal operations, like selling an asset or maybe a restructuring charge.
Okay.
Those can really skew the earnings picture if they're lumped in with everything else.
So I got to separate them out.
You do. Got to see that core operating income, the real story.
Don't be distracted by the shiny objects.
Exactly. It's all about digging deeper.
Being a financial detective.
I like that. It's about being skeptical, thinking critically.
Don't just take things at face value.
No way. You got to uncover the truth.
Okay, this is great. I feel like I'm actually learning how to read these things.
That's what we want.
But it's not just about the numbers themselves, right?
Right.
We got to think about the bigger picture.
We do. We got to consider the context.
The economic context.
Exactly. Because a company's earnings might look great on paper,
Yeah.
but if the whole industry is struggling or the economy is tanking,
Right.
those earnings might not last.
It's like a boat in a storm.
It is.
Yeah.
So you got to understand those bigger forces, those winds and currents that are shaping the market.
Okay, that makes sense.
Yeah.
One thing that's always fascinated me
Yeah.
is the psychology of the market.
Oh, yeah, that's a big one.
Why do we see those crazy swings in prices that seem totally disconnected from reality?
Right. Like the market has a mind of its own.
It does. It's crazy.
And this book actually offers some insights into that. Goes into the psychology.
Really? Tell me more.
Remember that metaphor we talked about?
The voting machine.
Exactly. How short-term prices are driven by emotions.
Fear, greed, all of it.
All of it. The book dives into those factors.
Herd mentality, right.
Oh, yeah. All those biases that can push prices around.
It's human nature.
It is. But understanding those biases can help us make better decisions.
How so?
Well, if you recognize those patterns,
Yeah.
you can avoid getting swept up in the irrationality.
So, give me an example. How does this actually play out?
Think about a market bubble. Prices are going up, people get excited, they jump in.
FOMO, right.
Exactly, fear of missing out. And that drives prices even higher, creates a self-fulfilling prophecy.
Then boom, the bubble bursts.
Exactly, prices crash, and everyone who bought at the top
Loses a lot of money.
It's classic, emotions taking over.
So how do we avoid that? How do we stay grounded?
The book really stresses focusing on the fundamentals.
Okay.
What's a company actually worth? Ignore the noise, stick to your analysis.
Easy to say, hard to do.
It is, it takes practice. But it's about being rational, not emotional.
Okay, so we got to keep our cool.
Exactly. Now, let's talk about something I know you're interested in.
Oh, what's that?
Finding those undervalued companies.
Ah, yes. The bargain hunter in me loves that idea.
Right. Finding those hidden gems.
That's the dream.
It is, and it's a core principle of value investing. This book gives you a roadmap.
Okay, lead the way. How do we find these gems?
One key is to look for companies that are out of favor.
Have a favor.
Yeah, maybe they're going through a rough patch or they're just being ignored,
Okay.
but they have solid fundamentals.
So the price doesn't reflect their true worth.
Exactly. Like finding a treasure at a flea market.
I love that analogy.
But of course, you got to make sure it's not a temporary setback, right?
Right. How do we tell the difference?
That's where analysis comes in. Dig into those financials, understand their business model, see what the future holds.
So look beyond the surface.
You got it. Look for the long-term potential.
So we're being contrarian investors.
You could say that. Going against the crowd.
I like it. But let's get practical. Are there any specific metrics we can use?
Sure, there are some classic ones. The price-to-earnings ratio, for example.
The KE ratio.
Right. Compares the stock price to earnings per share.
Okay.
Gives you an idea of how much people are willing to pay for each dollar of earnings.
So a low PE ratio could mean the company is undervalued.
It could, but you got to consider the context.
Right, there might be a reason for it.
Exactly. Maybe the industry is struggling or investors are worried about the company's future.
So we got to understand the whole story.
Exactly. There's also the price-to-book ratio.
Okay.
Compares the stock price to book value per share, and the price-to-sales ratio.
Lots of ratios.
They each give you a different perspective on valuation.
Okay, but how do we know which ones to use and how to interpret them?
That's where the book comes in handy. It guides you on how to use these metrics effectively.
Okay.
It emphasizes understanding their limitations, using them intelligently.
Not just blindly plugging numbers into a formula.
Exactly. It's about thinking, not just calculating.
This is amazing. I feel like I'm getting a crash course in value investing here.
Good, good. But remember, identifying those undervalued companies.
Yeah.
That's just the first step.
Oh, right. What's next?
You gotta have the conviction to hold on.
Even when things get rough.
Especially when things get rough. The market is volatile. Other people might doubt you.
So you got to trust our analysis.
You do. You got to believe in your process.
That takes guts.
It does. Value investing, it's not about quick profits. It's about patience, discipline, thinking long term.
It's a marathon, not a sprint.
Exactly. But, along with that,
Yeah.
we got to talk about managing risks.
Oh, risk management. That's a big one.
It is. And this book addresses it head on, gives you a framework for thinking about it.
Okay, because risk is always on my mind.
Makes sense. We all want to protect our investments.
So how do we do it? What are the key principles?
Well, one of the core concepts is margin of safety.
Margin of safety. What's that?
It's the idea that you should buy assets for significantly less than their actual worth.
Oh, okay.
So you have a cushion, a buffer.
In case you're wrong.
Right. Or if something unexpected happens.
Like a safety net.
Exactly. Because we can't predict the future.
Riser can't.
So margin of safety helps you absorb those surprises.
That's smart. Very prudent.
It is. It's about being cautious.
But how do we determine the right margin of safety?
It depends on the business, the earnings, the balance sheet, the economy.
So many factors.
There's no magic formula.
It's a judgment call.
It is. But the book gives you guidance, encourages you to be conservative, to err on the side of caution.
Better safe than sorry.
Exactly. Remember, investing is about more than just making money.
It's about not losing it.
Right. It's about preserving capital, finding that balance between growth and security.
That makes sense. So we've got margin of safety. Any other risk management techniques?
Well, we talked about diversification earlier.
Right. Spread the risk.
Exactly. Don't put all your eggs in one basket.
So if one investment goes bad,
It doesn't take down the whole portfolio.
makes sense. Diversification creates resilience.
It does. It's like building a balanced ecosystem.
This has been incredible. We've covered so much.
Yeah.
Financial statements, market psychology, risk management, and more.
And there's still more to come.
There is.
Oh yeah, we're just getting started. Stay tuned for part 3, where we'll delve even deeper into this investment classic.
Can't wait. And we're back for the final part of our deep dive.
Part 3.
Can't believe we've already covered so much ground.
I know, right?
But I'm really excited to keep uncovering those nuggets of wisdom. It's amazing how relevant this book still is,
It is.
even with everything that's changed in the financial world.
Well, it speaks to those enduring principles.
Exactly. They
Yeah.
really do transcend time and trends. And for this last part,
Yeah.
I'd love to focus on something that's often overlooked, but so crucial for long-term success.
Okay, what's that?
Patience and discipline.
The dynamic duo.
Right. Two qualities I'm always working on. So how does this book approach these concepts?
Well, it really emphasizes that intelligent investing is a marathon, not a sprint.
Okay.
It's about making those informed decisions based on solid analysis,
Yeah.
and then having the patience to let those investments play out.
So it's not about chasing quick profits or trying to time the market.
No, those strategies might work sometimes, but
Yeah.
they're not sustainable.
Right.
Often lead to emotional decisions, costly mistakes.
Definitely been there.
So the book encourages a more disciplined approach.
Okay, so what does that look like?
Develop a philosophy, stick to your principles, don't get swayed by the market's ups and downs.
I was very zen.
It is. It's about finding that inner peace amidst all the chaos.
The market can be pretty chaotic.
It can. And that's where discipline comes in.
Okay, how so?
It's about resisting those temptations, to panic sell when the market drops,
Oh yeah, I've felt that urge.
or to chase those hot stocks when they're soaring.
The fear and the greed.
Exactly. Discipline is about staying true to your strategy no matter what your emotions are telling you.
So it's about controlling those emotions, making rational decisions.
Exactly. Align your decisions with your long-term goals.
Again, easier said than done.
Oh, absolutely. It takes practice, but this book,
Yeah.
it gives you the tools, the mindset.
Okay, so what are some of the key takeaways?
Well, it emphasizes having a plan,
Okay.
setting realistic expectations,
Right.
staying focused on the fundamentals.
So like having a roadmap for your investments,
Exactly. And sticking to it, even when the road gets bumpy.
because it will get bumpy.
Oh, it always does. But with all the information overload these days,
Oh yeah, that's a constant struggle.
it is. It's hard to stay focused with all that noise.
So how do we do it?
Well, the book reminds us that we can control our information intake.
Right, we don't have to consume everything.
Exactly. Be selective about your sources.
Find the ones you trust.
Focus on what actually matters.
It's like filtering out the noise,
Yeah.
finding the signal.
Exactly. Take control of your information diet.
Love that analogy.
Uh-huh.
Okay, so we've got patience, discipline, controlling our information.
Yeah.
What other wisdom does this book offer? Any other insights for navigating the market?
Well, one that really stands out is the importance of being skeptical
Skeptical. Of what?
of everything. Question assumptions, challenge conventional wisdom.
Don't believe the hype?
Exactly. Especially those promises that sound too good to be true.
Right, if it sounds too good to be true.
It probably is. Don't take things at face value. Dig deeper, ask questions, form your own conclusions.
So we shouldn't just follow the crowd or believe everything we hear.
No way. Do your own research.
Think for ourselves.
Exactly. Become an independent investor.
Empowered. But with so much information out there, how do we know what to believe?
That's where critical thinking comes in.
Okay.
You evaluate information carefully, consider different perspectives.
Look for evidence.
Exactly. Don't just passively absorb everything.
Be discerning.
Exactly. And that's a valuable skill, not just for investing.
Right. For life in general.
Absolutely. It's about understanding the world around us.
This has been amazing. So much wisdom in this book. But before we wrap up,
Yeah.
what's the one thing we should always remember? The guiding principle for our investments.
That's a tough one.
I know, right?
But if I had to choose, I'd say it's this. Intelligent investing is about understanding value.
Value.
The difference between price and worth.
Okay.
Finding those opportunities where the market is mispricing things.
Buying at $1 for 50 cents.
Exactly. Seeing through the noise, focusing on the fundamentals.
It's about being a value detective.
I like that. Uncovering those hidden treasures.
And that's a concept that never goes out of style?
It doesn't. The market changes, technology evolves, but value investing.
Timeless.
Exactly.
This has been such an insightful deep dive. I feel like I've gained a whole new perspective.
Good.
Can't wait to put these principles into practice.
And remember, this is just the beginning.
There's always more to learn.
Oh yeah, the world of security analysis is vast.
So much to explore.
Keep learning, keep seeking those opportunities.
The journey continues.
It does.
Thanks for joining us on the deep dive. We'll see you next time for another fascinating exploration.